Hello dear students. Today we will discuss third illustration on issue of shares considering the journal entries and also the balance sheet. Here I have taken a problem on oversubscription when shares are issued at premium and also forfeiture of shares. So let us start. Sagar Company Limited issued for public subscription 20,000 shares of 10 rupees each at a premium of 2 rupee per share payable as follows. On application 2 rupee, on allotment 5 rupee per share including premium. That means in this 5 rupee, 2 rupee premium is included. On first call it is 2 rupee and on final call it is 3 rupee per share. Applications were received for 30,000 shares. 20,000 shares were allotted and the excess application money was refunded. So this is what we considered as a oversubscription. So what is the company issued is 20,000 shares, but they are receiving the application for 30,000 shares. That means 10,000 shares extra they have received. Additional transaction is there. Right? So that's why you will be going to get one more entry extra, that is for oversubscription. Why? Whatever the excess money you have got, you have to refund it. The company made all the calls and the money due was duly received except the final call on 1,000 shares. So this is for calls in arrears. They are not receiving only for 1,000 shares. Later, these shares were forfeited and reissued as fully paid shares at 8 rupee per share. See, this is a transaction for forfeiture and reissue of shares. Pass the necessary journal entries and also show how share capital appears in the balance sheet. So let us start with the solution. As you know, the first journal entry will be for application stage. So as they are receiving the application, we have to write the journal entry as bank account debtor to equity share application account. So what is the amount we have taken? That is 60,000. Why 60,000? Here application money is 2 rupee per share. Okay. So our company is issuing 20,000 share, but here they are receiving the application for 30,000 share. So whatever they have received, for that they have to show the journal entry, right? So that's why they are writing the journal entry for 30,000 shares of 2 rupees each. That is what the amount which actually has to be transferred to the share capital account is 40,000, because the company is issuing shares of 20,000 for 2 rupees each. So that out of this 60,000, they are transferring this 40,000 amount only to the share capital account. So this is a second journal entries. The journal entries will be same, what we have discussed in the last problems. Okay. And as we have that oversubscription, for that additional journal entry for application stage we are writing now. So this is a journal entry where we are considering equity share application account debtor to bank account. So here you can see 60,000 we have received, 40,000 has been transferred to equity share capital account. Now balance we are returning back to the shareholders. So this is, you can just observe, for receiving what is a journal entry, for returning back what is a journal entry. It is just vice versa. For receiving the amount bank account debtor to equity share application account we have written, and as we are returning it back we have written equity share application account debtor to bank account. So now let us move to the allotment stage. Second, the allotment stage, if you have remember, they have given the share premium, right? Premium they have given. So in the last problem also we have already discussed about it. So we have to take the entry as equity share allotment account debtor to equity share capital account. As a capital, how much we are transferring? 60,000 rupees. That is 3 rupee per share we are transferring. And 2 rupee whatever they have given for share premium, that we are taking as a share premium account. This is just, we are taking the journal entry as money due. It is not. Next entry is for whatever the amount was due that we have to receive in the allotment stage. Right? So for that we have taken the entry, how much we are receiving, bank account debtor to equity share allotment account. How much? That is 1 lakh amount we are receiving. The next entry is for share first call account. So for first call, again the amount is due 40,000. That is, they have given in the question 2 rupee per share. So 20,000 are the shares. Total 1,000 into 2 rupee per share we have to consider here. So 40,000 will be the share final call account that is due. In this problem, They have not given any call scenarios in the first call. Okay. So for the first call, whatever money was due for receiving, you can see the journal entry, bank account debtor to share first call account, 40,000, whatever it was due. So overall amount they are receiving. So there is no call scenario. So in the final call, equity share final call account debtor to equity share capital. It's happening for 3 rupee per share. So 60,000 rupees was due. So for that we have taken the journal entry. And the next journal entry is for call scenarios. As I said, in the question, it has already given that the company made all the calls and the money due were duly received except the final call on 1000 shares. So they have not received the amount for 1000 shares. So for each share, the amount is 3 rupee per share. So that means 3000 amount they have not received. How much they are receiving in this call? Only 57,000 they are receiving. So total 60,000 amount is the share final call account. Now, when the forfeiture entries has given, three more entries you will get. So here, for whatever 1000 shares, the company is not receiving the amount. Those shares, the company may cancel. Okay. So for example, Mr. A is there. Mr. A is holding this 1000 shares. Now, Mr. A has given the amount in the application stage, in the allotment stage, in the first call stage. But in the final call, when they are asking for the amount, he is not giving the amount. Okay, he is not paying the money. So now what the company will do? But company needs that amount. So for that 3000 rupees, as he is not paying, after a certain period of time, company will cancel those shares. Cancellation of shares we consider as a forfeiting of shares. For 1000 shares, they reissued Mr. B. Okay. Now, for Mr. B, they cannot issue again for 3 rupees. They will not issue. They will issue for more amount, obviously, right? So, in our problem, they are issuing for 8 rupees. Okay. Now, we have to write equity share capital account debtor. What is the equity share capital account they require is 10,000. 2. Share forfeiture account. So, as I said, 7 rupees they have already received. So 7,000 they will be considering as a share forfeiture account, and 2 share final call account. So which they have not received. Right, that is there still in the final call. Right, as a where it is there, it is in the share final call account as a calls in arrears. It is there that we are writing here. Okay, so being forfeiture of 1000 shares of 10 rupees each for non-payment of the final call of 3 rupees per share. Okay, so next journal entry is bank account debtor, share forfeiture account debtor to equity share capital account. So for what we are writing this journal entry, it is for reissue of shares. So for reissue, being reissue of 1000 forfeited shares of 10 rupees each at 2 rupee per share. So here for 8 rupee we have issued the share. So this is for 8 rupee we have issued the shares. So 1000 shares for 8 rupee each, that is 8,000 the company is having, but still they want this 8,000 they have to collect. So from forfeiture account as a 2 rupee per share they are taking the amount. So that is 2000 rupees. 1000 shares into 2 rupee per share. And the last journal entry will be for transferring the balance to capital reserve account. So that is equity share forfeiture account debtor to capital reserve account. So now in the, see here, in the forfeiture account, how much was the amount? 7,000 was the amount, correct? 7,000 was the amount. Now from the forfeiture account, how much we have taken? 2,000 rupees we have taken. So what is the balance we have in the forfeiture account now? 5,000 rupees is a balance. This 5,000 rupees we are transferring to capital reserve account. So this is, these three entries will be extra. So for forfeiture, this is for reissue and this is for transferring the balance amount to capital reserve account. So this is how we have to consider. Now let us move to the balance sheet. This is a balance sheet. Shareholders fund will take. Here in the share capital, they have given 20,000 shares of 10 rupees each. As we know, 20,000 shares they are issuing for 10 rupees each. All 10 rupees they are receiving. So 2 lakh rupees we have. Right. And come to the reserve and surplus account. In the reserve and surplus, we have securities premium. In the securities premium, how much we are receiving the securities premium? That is 40,000 rupees. Capital reserve account, at the end we have taken last journal entry 5,000 rupees. Okay, so these are all the items of the equity and liabilities, right? And come to the non-current liabilities. We don't have any non-current liabilities or the current liabilities. Trade payables we don't have, and other current liabilities also we don't have. Non-current liabilities, this is separate, and these are all current liabilities. Okay, these are all. So totally we have got 2,45,000. Okay, now to the asset side. So as you know, in the balance sheet, 2,45,000 if you have got in the equities and liabilities, in the assets also you should get the same, right? Now, non-current asset, they have not given any non-current asset. It is all nil. Cash and cash equivalent, they have not given. See, this is a bank amount actually. So in the bank account, 2,45,000 we have taken. So if you prepare the ledger account for bank account, you come to know that 2,45,000. All the journal entries we have, based on the journal entries, you will get the balance 2,45,000. So quickly, let us see how we have got this. Just for your understanding, see here. Uh, just a moment. See here. So here you are receiving the amount. 60,000 you are receiving, right? So 60,000 rupees you are receiving and 20,000 rupees you are returning back. Wherever two bank has written, we are giving the money. Wherever we have taken bank account data, that is we are receiving the money, right? So here you are receiving 60,000, you have paid 20,000 returned. Now you have balance as 40,000. Again you are receiving 1 lakh rupees, right? So you got 1,40,000 rupees now. Now again you are receiving 40,000 rupees here. Now you got 1,80,000 rupees. Here you are receiving 57,000 rupees. So 1,80,000 plus 57, and that is 2,37,000 rupees you have now. So 2,37,000. Then again you are receiving bank account 8,000. Correct? So it is 2,45,000. So this is how we have this 2,45,000. How we have taken in the balance sheet. This is how we consider if the forfeiture shares has given and we have to prepare the balance sheet. So I think the concept is clear to you. If you have any doubts, please post them in the comment section. Thank you so much.